Hey guys, per usual, all information on this channel is for educational purposes only and is not intended to provide financial advice. Alright, in my last video I asked the crowd who's got some questions for me. Blowjigek asked when to sell would be my question, or less specifically, when do I close this trade? It's a classic question. It's a great question. Everybody asks this question, so let's go through it. So for me, trading is three things. It's recognition of the recognition of what's going on, the trend, the trade, etc., entry and exit, and execution. You know, are you actually going through with your ideas? That's execution. Notice I say entry and exit. I don't say entry. You have to know when you open the trade, where you want to close the trade. That's how you are successful with this. And, you know, when we look at popular media, even Kenny Rogers knew the answer. He's in his song, The Gambler. He said, you gotta know when to hold 'em, know when to fold 'em. He's saying, you gotta know when to hold, you gotta know when you get stopped out. You gotta know when to walk away and know when to run. You gotta know when to stop trading and just get up, you know, do something else. You never count your money when you're sitting at the table. Don't look at your P&L in an active trade. Your P&L is your profit and loss. But will be enough time for counting when the dealing's done. Look at your P&L after it's all over. So many traders have trouble holding on to winning trades and panic close. Those same traders also have trouble closing a losing trade and get high on hopium, thinking the trade will turn around. It's also obvious that, you know, you need to buy low and sell high, or sell low and buy high. Sell high and buy low. But in reality, traders panic at tops and bottoms. They buy the top due to euphoria. They sell the bottom due to panic and fear. So you really have to keep in mind recognition, entry, exit, and execution. So you should have the target in mind before you open the trade. You can't really say, I'm just going to go long and hope for the best, or I'm going to short and hope for the best. You need to have levels in mind. So what does an exit look like? It's either a target or a stop. Now, a target, this is a great example when you're trading a triangle. My targets are always the previous local high and the previous local bottom. Simple. When this current triangle decides where it's going, I expect it to either go up here or go down here. So these can be dynamic or rigid. Your stops, your targets, they can be trailing stop, they can be a hard stop. Maybe they're based on your swap fees of your exchange. Maybe you're getting charged 10% a day and you decide after 5 days, that's enough for me, that's enough fees, I'm going to close this trade. So any trade is either going to hit your target or you're going to get stopped out, period. There's no like, oh, I should close this because blah, blah, blah. No. The more consistent you are, the more successful you will be. So how do we determine those targets? Well, we look at potential reversal zones, PRZs. So again, it's pretty obvious, but one PRZ is a local top, a local bottom. Okay. Another PRZ would be pivots. Now you'll notice the pivots sort of line up with the local top, right? So all of a sudden we have a little bit of confluence going on here. And again, this local bottom lines up with this pivot. This is a monthly pivot on CNY. Let's look at the fibs from this huge move. It's no coincidence that we are sitting at 666. That's the 50% fib of this entire move. It's no coincidence that the targets are going to be 785 and 547. The local low, local high, pivot. We also have giant fib levels at this zone. Those are potential reversal zones. Let's go to the pitchfork, everyone's favorite. My target is 5K. Why? Again, all this stuff lines up. We have the median line, which is where price is constantly trying to get back to, or a local low. Now the local low doesn't exactly line up, but you can think of it as maybe over here in this quartile. The point is, all this stuff kind of says the same thing. We're looking at 5K. And then if we think about stops, I talked a little bit about stops in the moving average video. So just to reiterate that, if I'm going long on this cross here, so it's a 5200 cross, the fast moving average crosses the slow. That's a good bullish sign. If I'm going long here, my stop could be a break of the 50. So you could get stopped out here, for instance. Your re-entry would be, maybe a break of this horizontal here. You get stopped out again, and some horizontal. This is all up to you, obviously, and it gets messier and messier the higher we go. But the point is, your stop could be below the 50. It could be a touch of the 200. You can see we never touched the 200 this entire run. So that's an example of a stop. Another example of a stop is if you're trading cloud, if you get a close in the cloud. This is on the hourly. I really like the hourly when I'm assessing the health of a trend. If you get a stop in the cloud, you can close. If you get a stop below the cloud, you can close. You can see in here we never got a close below the cloud. Maybe here we did. So your re-entry would be when we get a TK cross above the cloud, above some horizontal resistance. You can see here again, horizontal resistance. That's another good long, should you have closed here if you had longed down here. If we're looking at another version of a stop system, these are Bill Williams fractals. Basically, a bull fractal is a low, high, low, and a bear fractal is a high, low, high. So in a bull trend, price should never break a bear fractal. And basically that's what we're seeing here. So these hats are all the fractals. So anytime a candle closes below a previous bear fractal, that could be a stop out. So you could get stopped out here, you get stopped out here, stopped out here, stopped out here. So it's a little noisier, but it's another example of a stop system. And then lastly, divs. I talked about divergences. I'll link up that video. If you're long here based on the ascending triangle break, you could hold all the way until you start seeing some divs happen, and you'll notice we get a higher high here, but there's no div. No div. We get a higher high here, and all of a sudden there's a div. All of a sudden there's another div. Uh-oh. This says that the bulls are weakening, and the strength of this trend is weakening. So that was another sign that this is going to reverse. And sure enough, it did. So your close could be the close of some high. It could be one of these red candles. Completely arbitrary and up to you. So, Blowjagek, I hope that answered some of your questions. As usual, guys, if you have any more questions, let me know in the comments, and happy trading.